Okay, let's dive right into this. Welcome, investors, to today's explainer. If you've been following the semiconductor space even a little bit, you already know that Intel is right in the middle of one of the most high-stakes corporate turnarounds in modern history. I mean, we're looking at a complete, ground-up architectural overhaul of their entire business model. They are moving away from being a traditional integrated device manufacturer, meaning they design and build their own chips under one roof, to an independent foundry model. So today we're going to separate the headline hype from the actual, underlying financial and technological realities.
To really wrap our heads around the sheer scale on this turnaround, we have to start with this number, $11.1 billion. That is the approximate financial commitment the U.S. government has directed toward Intel so far. To put a staggering number like that into perspective, that is roughly the entire cost to build and launch the James Webb Space Telescope. This includes a massive $7.86 billion direct grant from the CHIPS Act. So right out of the gate, it's absolutely crucial to understand that this isn't just a regular corporate restructuring. This is a turnaround heavily backed by national security interests and government capital to rebuild a globally resilient supply chain.
Here's a quick roadmap for our explainer. First, we'll unpack Intel's Foundry pivot. Second, we'll examine their 18A technological leap. Third, we'll look at their major client wins. Then we'll balance all that optimism with a TSMC reality check before finally wrapping up with the ultimate investor takeaway.
All right, let's jump right into Section 1, Intel's Foundry pivot. Out in the real world, this pivot requires a level of capital expenditure that is just hard to fathom. Intel is expanding its global manufacturing footprint at a staggering pace. We're talking about brand new wafer facilities well underway in Ohio, significant expansions happening in Arizona specifically for the upcoming 18A node, and advanced packaging expansions out in New Mexico and Oregon. The physical scale of this investment is just immense. But you know what? It is entirely necessary if they want to actually compete as a world-class foundry.
But hey, building giant factories is really only half the story, right? We have to look under the hood at the financial engine. Get this, since 2020, Intel's annual revenue dropped by roughly $24 billion compared to last year. And yet somehow, their workforce actually grew by 10% over that same period. That's just not sustainable. So under the leadership of new CEO Lip Bhutan, Intel has taken a strict, clean sheet view of the business. They're rebuilding their cost structure entirely from scratch, basically admitting the old way simply wasn't competitive anymore. To fix it, they're radically altering their operating model by completely separating Intel products from Intel Foundry. By establishing the Foundry as an independent subsidiary, they're aiming to drive real accountability, cut the fat, and seriously improve capital efficiency.
Which brings us to the engine that's actually driving this potential comeback. Section 2, the 18A technological leap. So, Intel recently announced that its 18A process node has officially hit high-volume manufacturing with the launch of their Panther Lake processors. This is huge because it effectively completes Pat Gelsinger's incredibly ambitious 5 nodes in 4 years strategy. And crucially, these are the very first 2-nanometer class chips manufactured entirely within the United States.
Now, the big question is how this specific technology creates actual business value. Well, Intel 18A is the industry's first high-volume node to combine ribbon FET, which are advanced gate-all-around transistors, with something called PowerVia. And PowerVia is a total game changer. It's literally like taking all the plumbing in a house and moving it to the outside walls just so you have more open living space inside. It moves the power delivery to the back of the chip, which completely frees up the front-side space for signal routing and minimizes voltage loss. For clients, this translates to a massive 15 to 25% improvement in performance per watt. For AI PCs and mobile devices that live and die by battery power, that level of efficiency is a killer competitive advantage.
And all of this builds into Intel's broader systems foundry approach. See, Intel isn't just selling individual chips anymore. They are enabling incredibly complex systems of chips. Instead of a traditional monolithic system on a chip, they're utilizing advanced packaging technologies like Foveros 3D to stitch different chiplets together seamlessly. This means customers can actually mix and match different process nodes on the same package. This disaggregated approach increases density and massively boosts performance for those super demanding workloads, like AI accelerators. Of course, having the best technology in the world doesn't mean much if nobody is actually buying it. That takes us to Section 3. Securing major client wins. For years, the biggest dark cloud hanging over Intel was whether external clients would ever actually trust their new foundry. Well, the answer is a resounding yes. Just look at this lineup.
Google has placed a concrete order for over 3 million of their custom AI chips for 2028. Amazon has fully committed to 18A for its AI fabric and future Graviton server processors. Microsoft is using it for their Maya AI accelerators. And Nvidia, yes, Nvidia, is actively running early trials on 18A for its upcoming GPU architecture. This is truly unprecedented hyperscaler validation. It proves without a doubt that top-tier tech clients are more than willing to break the TSMC duopoly and trust Intel with their most advanced silicon.
But commercial clients are only half the story here. Hold on to your hats for this number, $151 billion. That is the budget ceiling for the U.S. Scalable Homeland Innovative Enterprise Layered Defense Program, thankfully known as SHIELD for short, and Intel just secured a position in it. What we're seeing is Intel aggressively leveraging its domestic manufacturing base into a massive geopolitical advantage. Beyond that SHIELD contract, they've landed a $3 billion secure enclave contract with the Department of Defense. They've also been tapped for the Pentagon's RMC program, which basically allows major defense contractors like Boeing and Northrop Grumman to use the 18A process. And for a little context on how the broader market views this U.S. backing, the Trump administration's equity purchase of Intel shares has actually seen a 300% return and is now worth an estimated $36 billion. For any organization looking to mitigate those heavy supply chain risks tied to Taiwan, Intel is actively positioning itself as the premier, trusted U.S. alternative.
Okay, despite all this incredible momentum, we really need to hit pause for a second. Section 4, the TSMC reality check. We simply cannot evaluate Intel's turnaround without taking a hard look at the incumbent giant they are trying to dethrone.
Now, what's really interesting here is the bearish counter-argument, captured perfectly in this quote from 01 Investment Research. TSMC's absolute dominance in manufacturing generates massive, sustained revenue. That revenue then directly funds their continued R&D, creating this incredibly powerful self-reinforcing dynamic. Intel's Foundry business, which is just now securing its very first major external customers, simply cannot match that native investment capacity yet. Intel has to be dramatically better at improving their yields just to keep pace, let alone actually catch up to TSMC's immense scale. So, when we game out the future scenarios, the landscape is definitely challenging. Right now, Intel's Panther Lake yields are reportedly sitting at a respectable 65 to 75%, which matches TSMC's competing N2 node. But winning customer designs requires overcoming the massive switching costs of redesigning entire chips for a new foundry. In the optimistic scenario, Intel achieves yield parity late this year and narrows the tech gap to just a single node by 2028. However, the pessimistic view suggests that if 18A yields falter when pushed to true scale, Intel could remain 1 to 2 nodes behind for the rest of the decade, surviving primarily on U.S. government support and defense contracts.
To avoid that pessimistic scenario, Intel is literally having to rewire its corporate DNA. Historically, Intel relied on a very rigid copy-exactly methodology. They required every single fab to replicate process parameters perfectly, with 0 deviations allowed. Now, that worked beautifully when they were the undisputed leader, but to catch a nimble giant like TSMC, reports indicate Intel is having to completely abandon this rigidity and adopt the much more agile, flexible manufacturing methods used by the modern pure-play foundries they are competing against. All right, let's bring it all home. Section 5, the investor takeaway. How do we synthesize all these monumental shifts?
If we boil all this down, the investment thesis right now is an extreme balancing act of risk versus reward. On the plus side, Intel's technological innovation engine is undoubtedly running again. The 18A node, driven by RibbonFET and PowerVia, is a reality. The validation from hyperscalers like Google, Microsoft, and Amazon, combined with those massive Department of Defense contracts, is totally unprecedented. But on the risk side, the capital expenditures required to sustain this are a huge drag on the balance sheet. And Intel still must prove flawless, sustained execution at scale to truly challenge TSMC's self-reinforcing dominance.
Which leads us with this final, pivotal question to chew on. Can Intel's undeniable geopolitical advantage as a domestic manufacturer, paired with their radical new foundry model, actually overcome a full decade of structural lag behind TSMC? The technology is ready, the government funding is locked in, and the clients are lining up. But in the semiconductor industry, execution at scale is the only thing that matters. Thank you so much for joining me for this explainer. Make sure to keep a close eye on those independent 18A benchmarks later this year, as they are going to be the ultimate proof of Intel's turnaround.